Was the market going to go down no matter what? Because you can't please all the people all the time.
So when we take a step back, we have to recognize that this sell-off began in September. The Fed just exacerbated the drawdown. But look, I think some people are talking about a dovish hike in that the Fed lowered its glide path for Fed funds from 3 hikes to 2 hikes. I think it's going to be a challenge for it to stick to the 2 hikes. And look, Andrew, you said that it's priced into markets. I kind of disagree. I see a big gap between Fed projections and where the market is expecting.
I don't think the market's there, but my anxiety is the market's going to get there. And then we're going to have a whole other problem.
I think that the Fed will converge. They already cut to 2. I think it's going to come down even more. I think the Fed needs to back off before they make that policy error.
I can't believe you can make a policy mistake at 2.25 to 2.5, but we don't know. They don't know.
But this is on top of QT.
I know.
I mean,
yeah,
we've got double tightening here.
I know. But Matt, what do you think?
Well, making a policy error is about movement, not levels. So if you get to 2.5 from 0, that's still 250 basis points of incremental tightening. So you can make a policy error at any level. And the mistake yesterday was the word autopilot in our estimation. Autopilot to the bond market on the balance sheet means the Fed has a predetermined course, and we know what those predetermined courses look like when they end. That's the scary word. They have to adjust that and take into account all the hiking they've already done in their future policy. He didn't say that. That was the mistake.
Now we're down about 37, but Talley, you said that it started in September. You don't tie it to the time when, to the Judy Woodruff interview where he talked about being a long way from neutral. You don't think that it was kind of coincident with those comments?
I think.
You think it was ready?
I mean,
market's
macro fundamentalist.
Yeah, market's correct from time to time.
Right. I think it's tight financial conditions.
Well,
I think it's
that's him.
In part because of, look, they've been raising rates since 2015.
9 times. Yeah, 9 times. December of 2015.
9 times, 4 times this year, precisely. But we're seeing a sequential slowing in economic growth in response. We started the year at 2%. We went up to 4. We're now at trend, about 3.5. And the Atlanta Fed's GDP tracking model is coming in with a 2 handle. So back to a 2% economy. You mentioned yourself, inflation slowing in part because of the strength of the dollar. The argument for continued aggressive rate hikes isn't there.
So then, see, that's the thing. They almost seem stubborn. He almost seems stubborn to me. That it's hitting him over the head that maybe you could have said.
I wish you said,
right?
Look, I want to bring on 50 more basis points for one singular reason: to protect us in the next downturn. I want some ammunition.
Right.
Instead, we got, I think, chaos because, and you saw that chart you brought up earlier. In the runoff, which has already been predetermined, nobody ever suggested he was going to change the runoff pace. That was not part of the discussion. The only delta was the idea that I'm going to hit you with 50 no matter what happens.
And now we are going to obsess over this for the next 3 months.
But things aren't that bad.
Every minute we're going to be.
And we're not going to 3 months. We're going to like the next 6 weeks.
And we're not. And we're not going to. They're not going to say anything. We're not going to know what he's thinking.
I don't intend to make this political, but I do think, and I watched it twice. I thought that a little bit of what he was doing was trying to say, I am completely independent. I don't care what I thought there was this sort of emphaticness about everything he was doing.
And we should have raised $50 billion in market cap for that? That's great.
No, I'm just suggesting that I think he's taking this sort of political cloud of this much more seriously than I thought he was.
Well, a lot of people have joined Trump in saying that it's not the time to raise. I can't believe
he did some Trump bashing. He was very clear.
What happened to Bullard?
That this almost was that.
As a reaction to not.
Yeah, that, I don't mind jawboning Trump, but taking down the market to show you I can do what I want, I just can't even.
Where's Bullard and Kashkari and these other doves? What happened to them? They must be in those meetings pulling their, well, Kashkari, like you, Kevin, doesn't have any hair to pull up, but Kashkari, they must be pulling their hair out in. Sorry, Talley. I don't want to leave you out either. But
Joe, I'm going to grow mine back just to make you crazy.
Can you? Is that so? That's
whoever does that. That's a Shark Tank deal right there. I'll invest in it.
It's a chosen look.
So, Matt, I thought that the equity market was trying to find a bottom at 2,500 on the S&P. Can it find a bottom now that we're totally sort of in the everything every little bit of body movement that they make from here on out, we're going to be interpreting either positively or negatively. Can we make any headway?
I think you need a statement. I think that the Fed is going to have to.
I didn't mean what I said yesterday. Sorry, I screwed up again.
Yeah.
That kind of statement.
I think the FT, the Wall Street Journal, I think you're going to need some leak that they've opened the door and they'll adjust as they go forward. It's not on autopilot. That's the most dangerous word. I do think it's salvageable. But they have clearly left the markets to the holiday concerned about something. There's too much to be concerned about globally already on growth. We didn't need to fight the Fed as well. It's correctable. I think they'll correct it, but it's going to take a little bit of time.
I mean, I hate to be, to satisfy the spoiled brats and the traders in the market, because you remember when QE was ending, they had a taper tantrum. They're always going to sell the market off when they don't get what they want.
Let's ask Matt on a more positive note this. The credit spreads did not blow out yesterday, which generally are confirmation of chaos ahead into a recession.
But the 10-year flattened miserably.
Yeah, but you got to look at the triple B and below. Matt, what do you think? We didn't see any really big moves through all of the chaos on the debt and the credit side.
You didn't, but you saw it in the most liquid form. So the cash credit markets are nearly closed for the holidays. Liquidity is quite low. Where you saw it is in more liquid trading, CDX, which will be used as the hedge vehicle. And that moved quite substantially, down a whole point. So I do think there's more pain underneath. The bond markets will not like this. A message is going to have to be sent to soften that.
Okay, no more optimism out of me. That's it.
We don't need any optimism. What, the house is not burning? We don't need that on this show. We won't allow it. Tally, the world's ending. What are we going to do?
Look, I think given everything that you just said, which sounded pretty bearish, I'll highlight that positioning is lopsided. We've got put-call ratio at upside extremes. Sentiment is really washed out. We've got a preponderance of bears.
You don't run a short fund, though, do you?
No, and I'm making
You've got to be along all the time.
I'm making tactical statements, too. Right?
Okay.
And all of this stuff helps.
So it's a short-term rally and a weak trend?
That's fair. But look, I would say even longer term, if we're right that the economic expansion continues, and look, 3.5% economy is far from recessionary. Leading indicators of business activity are still very strong in the U.S. Despite the fact that investors are behaving like this is a recession, I'm not seeing it right here. I think this could be a buying opportunity.